Welcome to the stream. Late start this morning. We got to turn the stream on. Here's my trading. I already did some trading. Just didn't go live. So here's the trades I took. Went long. Got in here. Added another one. Start getting out. Then just then added again. Got out. Added again. Got out. Just bought my pullbacks.
Y a disfrutar más.
Anybody trading today? So it looks like we're trying to fill the gap. Oh, we had a small pullback here. So roughly at 620. Yeah, I think we're gonna do it. I mean, I'm all done trading for the day. Not feeling good. So we're back where we started. At least where I started trading. Let's take a look at the big picture here. So we did the double top here to the moving average. This is showing overnight. 15-minute chart. So 620 would be right around here, which is gonna happen, looks like right now. Looks like it wants to. We might be getting some news in about 30 seconds. So that might help it. One second. There we go. See? I think there's some news. quite get to did we? No, not quite. This closes the tapping tail, closing below this body. Looks like we're going to be going lower.
Nice. billion. That was the biggest we have seen in terms of the negative number since March 2022. Why? Because everyone was trying to get ahead of Trump tariffs, and so the imports actually soared. So this is why when people say businesses should not be surprised to see this tariff announcements, and they weren't. They were planning for it because imports soared, and a lot of it was industrial equipment because they were trying to hoard and buy before prices go up on tariffs, which they were vindicated by as we got some tariff announcements this week, even if they were delayed.
Can I ask you about the Treasury funding a little bit?
Sure. No, that people were watching this closely. It came out at 8:30 because it was the first one under Scott Bessent, the new Treasury Secretary, and there was some expectation that maybe he would sell more debt at the long end instead of the short end, which is what Yellen did. But it was unchanged from when Yellen did it.
They basically maintained the same policy as the previous administration.
Yeah,
so tilted towards the short end.
At least for the next several quarters, I think was the comment. But yes, it was retained, and there is a belief that eventually he's going to weight more issuance to the long end, but didn't happen. So turned out to be sort of an unchanged number. They got to raise the debt ceiling. Remember, they're still kind of in like emergency mode on measures to try to raise the debt ceiling.
Yeah, where are we on that? Are we?
You know, we're still in these. We're still Treasury is. We've hit it, but Treasury can do special measures, as Treasury Secretary Yellen said, for a few months until we exhaust that. So that's coming.
Yeah, I mean, government runs out of money in 37 days.
It's coming, right.
And a lot of discussion this week about the House and their budget process and whether the Senate's going to try to leapfrog them, as the margin in the House is making life difficult for Speaker Johnson, at least. Yeah, and is it going to be all in one bill? Either way, I mean, I would hate to see the drama over the debt ceiling right now. Don't expect, hopefully, that we'll necessarily see that with the Republican majority. But it's something for investors to watch. Aside from that, the trade policy is still dominating conversations. And because it's earnings season, we really got a taste of how companies are thinking about it, planning for it, talking about it. They're all having to answer about it. I mean, for Chipotle, listen to what the CFO said. Clearly, avocados are big from Mexico.
Our guidance does not include the impact of the new tariffs on items imported from Mexico, Canada, and China. We source about 2% of our sales from Mexico, which includes avocados, tomatoes, limes, and peppers, and less than 0.5% of our sales from Canada and China. If the recently announced tariffs go into full effect, it would have an ongoing impact of about 60 basis points on our cost of sales.
Mondelez, CFO, also talking about it. They're dealing with the high cocoa prices, which is aside from the tariffs, but will also be affected by tariffs if they go through. Listen.
We expect an adjusted EPS decline this year, given the unprecedented levels of cocoa costs in our chocolate P&L. This decline is expected to be approximately 10%. This outlook does not include the impact of the potentially significant new executive orders imposing 25% tariffs on U.S. imports from Mexico and Canada. This would create an additional headwind to the business, but given the fluid and rapidly changing nature of timing, it is difficult to provide a reliable estimate of impact for the full year at this time.
I think the upshot with some of these company executives is, guys, they're not baking it into their forecast because they don't really have the guidance on when these tariffs hit and whether they will actually go through. So it's not doing that, but they are being more precise about exposures to what they import from Mexico, Canada, China, Mattel. I mentioned Mattel's a big winner. They say China is going to represent less than 40% of global production for toys compared to an industry average of 80%. And with the U.S. representing about half of our global toy sales, our tariff exposure in the U.S. related to China should be about 20% of global production. So we are getting specifics for analysts to start putting into models if we do see these tariffs go through. It's why you see the market sell off on tariff days, because they have, investors have to reassess the earnings outlook on its costs and potential demand destruction if these companies have to raise prices on consumers.
Yeah, well, it's also potentially weighing on shares of Apple, which we'll take a look at now, of course, down about 1.6% on reports that China is taking aim, perhaps, at the tech giant. Eunice Yoon is in Beijing and can fill us in on exactly what may or may not be happening here. Eunice.
Thanks, David. Well, Chinese regulators are reportedly considering launching an investigation into Apple for anti-competitive practices. Bloomberg is citing sources. CNBC reached out to Apple as well as to the Chinese government, but have not yet heard back. So we have no response. Now, the issue is an Apple policy that requires the company to get a cut as much as 30% of all revenues of the transactions on the apps on its platforms. Now, this has been a long-standing point of contention between Apple and its partners, as well as state authorities. In fact, since late last year, state media, including the Global Times, which is a Communist Party paper, have been describing this as the Apple tax and saying that it's monopolistic as well as unfair to consumers. Now, this also comes as Apple has been struggling to maintain its market share because of competition from local rivals, and as it looks to seek to get approval for its AI services and to bring them to this country. It also, of course, coincides with what we've been reporting all week, the fact that there are these latest rounds of trade disputes between the U.S. and China. Guys?
The fact that companies are now being targeted, specifically PVH was yesterday. I mean, Apple potentially today. This is a new chapter. I wonder which companies, how worried companies are, and who else should be worried.
Yeah, I think companies are worried. They already were starting to become concerned when the PVH case first came about. And then yesterday, it was also Google. People were surprised that the market regulator said that they were looking at Google for anti-competitive practices. Google has a very large market share when it comes to the Android OS. It makes a lot of money here. You wouldn't think that because the search engine isn't allowed. But it's interesting that they are singling out companies, and one of the reasons why this report about Apple has become so important.
Eunice, appreciate that. We'll talk soon. Eunice Yoon in Beijing this morning. Meantime, Alphabet's the other Mag 7 name under some pressure today. The company reports a revenue miss, but more importantly says CapEx spending will be more than the street was expecting. Let's talk about that and Apple this morning as well. Barton Crockett's with us, Rosenblatt Securities senior analyst, has a hold on Alphabet, raised his target to 205 from 193, a buy on Apple with the 263 target. Barton, good to see you.
Morning.
Is the CapEx number at Alphabet the story?
It's clearly a key part of it. I mean, I think it's no secret, obviously, that the hyperscalers are growing spending 40, 50, 60% this year. And that's great for NVIDIA, great for the other equipment suppliers. I think for the services companies, what you need to see is that investment is paying off, that you're getting a return on that. We're seeing that in spades with Meta. With Google, it is less clear because, the acceleration in the core business is not, been what we've seen at Meta. And then there's this cloud of uncertainty. Does AI create the opportunity over time for there to be, more competition in search? You compound that with the antitrust, risk to distribution. And I think there's some longer term concerns that put a capper on the multiple people want to pay for Google today.
Right. But isn't the notion that search kind of keeps chugging along was one of the positives from last night?
Search was certainly a positive from last night. And I'm talking more, bigger picture. I mean, the investment in AI is making, Google's search better. It's making, Meta's advertising better. But it's also enabling people like Perplexity to come in with a search, solution that is, uniquely competitive with, Google. And we haven't really seen that before. DuckDuckGo was not really competitive. So, I think that it's a new world and there's concerns. That was not front and center last night.
How about Apple? How are you sort of calculating or looking at political risk and some of the collateral damage that some of these corporates might absorb?
Well, look, I mean, this is very surprising. I mean, I think we went into this year thinking that it should be like it was last time, where Apple was carved out from the trade wars, and the Trump tariffs. And that's not happening, and China's responding. So this is right now different than we expected. We do, see that this is a volatile situation. So I'm hesitant to really think it makes sense to jump on any one news point today because, under the Trump administration, it could be a very different news point tomorrow. And obviously no one is really an expert in kind of China antitrust law, but it does feel like this is very much tied in with the trade process. I mean, why are Google and Apple coming up now and they didn't come up, at this level a couple of months ago? And it seems to be the tariffs, which suggests that there's a lot of room for the U.S. and China and Trump and China to figure something out, that sets us to the side, because nobody benefits if there's a full-out trade war, and I think they both understand that.
I want to get back to Alphabet. I mean, cloud obviously was up 30%, but the growth rate decelerated. Maybe another reason why there's a bit more weakness in the stock price, not along with that CapEx guide. But they talk about being supply constrained. I mean, again, you noted this. NVIDIA shares are up, Barton. There's no, are your expectations that they are going to continue to decelerate in cloud?
No, I'm not. I mean, I do think that there's a lot of noise in that cloud number. I think cloud is a source of strength for Alphabet, Google right now. Our survey work would say that, IT managers at large enterprises, think if anything, Google is the best position of the major cloud providers, ahead of Microsoft, ahead of Amazon Web Services. So I'm not worried about that. I do think that was more noise than substance, that number last night.
So what are you worried about then?
Well, I think that, like I talked about, I think that there is concern about the long-term prospects in search. And I think that puts a capper on the multiple people want to pay for Alphabet. My rating is neutral. My price target's up a little bit, so I'm not negative, but I'm not going to be overexposed to Apple, when we're going through this process of determining what the antitrust outcomes will be and what's going to happen in search.
Barton, it's a lot to digest. We'll keep close. Barton Crockett, appreciate it. Over at Rosenblatt.
Great, thank you.
Here's our roadmap for the rest of the hour. Shares of AMD plunging. What analysts are saying now about the stock following a miss on key metrics.
Plus, Disney beat profit estimates, although they are guiding towards losing a few more on the streaming side in terms of subscribers for the next quarter. We're going to dig deeper into those results.
And a big interview coming. The CEO of Shell will get his outlook for energy demand and prices in production as S&P's lower, but VIX still just hovering around 17. Squawk on the Streets back after this.
Insurance.
Welcome back to Squawk on the Street. Disney beat on the top and bottom lines, did see mixed signals in streaming. Overall, direct-to-consumer business did report a profit, but they're guiding towards losing some subs Q1 to Q2. Joining us now from Post 9 is Loop Capital analyst Alan Gould. Has a buy rating. Price target's 125. So what did you think of the quarter, Alan?
Hi, David. I thought it was a pretty good quarter. They did beat on the bottom line. There was a lot of the beat was on the cost side. Revenue was about where we were expecting. But if you look, there's sort of four main things. DTC sub growth was higher than the street was looking for, and they reaffirmed the $1 billion target for the year.
In terms of profitability.
In terms of profitability. We knew that there was going to be churn after the price increase. Didn't know it was going to extend into the second fiscal quarter. In terms of the growth in the DTC business is more than outweighing declines in the linear business. DTC was up about $400 million. Linear was down about $100 million. Parks, they said it beat their expectations. I mean, there's a lot of concerns about Parks because Parks really is the engine. That's the core earnings at the company right now. So Parks did better than expected. They reaffirmed their 6 to 8% guide for the year. I wish they talked about, we're running ahead, our expectations are higher, but did not change or upgrade any of the estimates.
Is that why the stock is not, is down a little over 1%?
I think so. I think if we would have seen any increases in guidance, the stock would be up. The quarter was certainly fine, but there was a little bit of caution and hedging. And given the macro environment, I guess it's not surprising. Rarely do companies raise estimates in the first quarter.
Yeah, I mean, they are talking about that modest decline in Disney Plus subscribers compared to the first quarter for the outlook as well.
Right. And the ARPU was a little less than I was looking for at Disney Plus. So again, it was the cost side. Disney Plus costs, programming costs were down about $115 million year over year. Now last year you did have a full quarter of Hotstar, including soccer, including cricket. This year you only had a half quarter of Hotstar.
What's the thesis on Disney? Like, how does it all tie together?
Sure.
For the narrative. And do you think Bob Iger has successfully done that? Because what we just ran through were like a lot of separate businesses.
Right. I think the thesis on Disney is it's one of the great brand companies out there. And they've always been able to move their brands to be in the most valuable area, whether it was moving to parks, home video years ago. Now they're moving it to streaming. And the Disney brand is what's key. That's what Iger did. He bought Pixar. He bought Lucas. He bought brands. So the key here is this is one of the great brand companies. The stock traditionally has traded at a nice premium to the market. Not surprisingly, it's been trading at a discount to the market the last few years with the traditional media companies as they're making the transition from linear to digital. Disney seems to be on the right track. Iger seems to have taken it on the right track. Didn't mention the studio at all, but studio is turning around.
Moana 2 was a hit.
Yeah, they had some hits, right?
And Moana 2, if you think about it, a couple years ago, that was supposed to be a direct-to-consumer video. It was supposed to just go to Disney Plus. And Iger looked at it and saw Moana the original was the most streamed movie on streaming. He said, why are we putting the sequel to streaming? Let's put it into the theaters. And the movie's done over $1 billion at the theaters.
Parents just want to get their kids out of the house. It was not even close to as good as Moana 1. I have to say.
Overall, though, Alan, I've made this point a number of times. Netflix quarter, in terms of additional subscribers, was just
a blowout.
Yeah, and nobody's come close. The Peacock numbers obviously far smaller. No additions here, no real additions. Can anybody truly compete with Netflix when it comes to the streaming war?
Netflix has clearly won the streaming wars. It's a debate who's going to be number 2, and it may be a distant number 2.
You think Disney can successfully be number 2?
I think number 2 is probably Disney or Amazon, depending how much Amazon wants to put into it. And we don't know how the rest of the world's going to turn out. It's not going to be separate. Peacock, Paramount Plus, Max. Yeah. There's going to be some combination of the others. There has to be.
And finally, he did have some nice things to say about linear networks, which we paid close attention to on the call.
I'm sure you do.
They're not a burden at all. In fact, they're actually an asset.
Wasn't that a reversal from what he told you?
Yes, it was.
Interview?
A year and a half ago. But yes, he seems to be getting a little more constructive on them. You buy it?
Not really. I mean, I think he also said we're investing in to the degree necessary to grow our streaming business, which is where the future is. So I think they're managing the decline by spending less money on content and marketing on the linear businesses to manage the decline and the transition to digital.
Right. Well, yeah, it was down 11% operating income.
Yeah.
But you're going to put a buy on the big spinoff from Comcast, right? Sure.
Especially CNBC. That is the golden jewel.
Alan, you can come back. Alan Gould from Loop. Thank you.
Thank you.
Another earnings mover to watch, Novo Nordisk shares rising on its Q4 profit beat, thanks to strong demand from its Wegovy obesity drug, posting a 107% year-on-year increase in Wegovy sales alone. The stock's still down more than 25% over the last year of trading. We'll be right back.
Supply.
Welcome back to Squawk on the Street. I'm Silvana Hanau with your CNBC News Update. President Trump said this morning he wanted to strike a nuclear deal with Iran nearly 7 years after he withdrew from an Obama-era agreement that sought to curb Iran's nuclear program. The president said on social media this morning any reports that Israel and the U.S. would work together to, quote, blow Iran into smithereens and, quote, were greatly exaggerated. A U.S. military plane carrying more than 100 deported migrants arrived in northern India today. It is the first time the U.S. has used a military aircraft to transport Indians who had illegally entered the U.S. The flight comes after President Trump invited Indian Prime Minister Narendra Modi to the White House for a visit next week. And the CIA is now offering buyouts to its workforce in the latest move by the Trump administration to overhaul and scale back the federal government. The offer of 8 months of pay and benefits is similar to deferred resignation offers proposed to other federal employees. However, some CIA workers are not eligible, including those handling high priority tasks. David.
Thank you, Silvana. Well, let's take a look at shares of AMD because they are down more than 10% this morning, despite what was at least a beat in terms of what analysts expected for profits from the company. It did miss estimates in that key data center segment. Christina Partsenevelis is here. She can sort of break down the numbers for us and the street reaction. Christina.
There was also growth that was pretty muted for the first half of 2025, and why Oppenheimer says the second half of this year will really be under scrutiny, and AMD is, quote, now clearly a show-me story. Bernstein, JP Morgan, Rosenblatt, all examples of companies that at least dropped their price targets by $25. HSBC betting shares are going to fall to $110. Wedbush argues the data center GPU miss, David, that you mentioned already in Q4 was not really in the cards, which is why you're seeing the stock sell off a lot more today, 10%. While Morgan Stanley, quote, says the sense is that the MI350 helps modestly, so that's AMD's AI GPU, but the real potential inflection point is likely the MI400 in mid-2020. In other words, a ways away. Investors were pretty negative going into this earning print, with shares down over 38% just over the last year, underperforming the stocks chip ETF, which is a great barometer. That's up 8% during the same time frame. Qualcomm, got to switch gears on the other hand. That company is up over 19% over the last year, and their earnings are out over the bell. Three main areas of focus for this particular name. First, you got smartphones. The company is winning with Androids, landing 100% of Samsung's new phone chips, which is up from just partial share before, although they are losing Apple as a customer in the near term. The second focus is auto and IoT, where peers like onsemi, Texas Instruments, NXPI reported weakness. And then finally, AI. Recent advances in efficient AI models like DeepSeek suggest sophisticated AI can actually run on less powerful chips, which could potentially accelerate edge computing adoption, which is really where Qualcomm excels. That's the edge is the laptop or our phones. Lastly, ARM earnings. They make money by licensing chip designs to companies like Qualcomm, for example, and over 50% of the revenue stems from smartphones. And the royalty rates are actually moving higher, which means more revenue. And the data center segment seems ripe for growth as its customer base for its IP licenses expands. So they're able to benefit from that AI push, and why the stock is running up over 2.5% into earnings today, David.
Yeah, interesting to see that. And its a market cap at this point is actually exceeding that of AMD's, I think, neck and neck. Christina, thank you.
Thanks.
Speaking of ARM, the CEO will join us tomorrow morning. That'll be in the 10 a.m. hour of Squawk on the Street.
Meantime, after the break, the CEO of Shell is going to join us on how the company's navigating these global trade tensions, including the latest Chinese tariffs on American energy, when we're back in 3.
Motherfucker.
Oil and energy remain in focus as trade negotiations continue between the U.S. and China. The country retaliating against the U.S. tariffs with a 15% tariff on U.S. LNG coal exports and 10% on U.S. oil imports. Those come, though, as U.S. exports to the country have pulled back from their recent peak, now only accounting for less than 5% of total oil exports. Our next guest, leading an international supplier of LNG to China and the broader global market, Shell CEO Wael Sawan joins us now. Wael, it's great to have you back on the show. How do you think, first of all, the trade fight between the U.S. and China and potentially broader than that is going to impact oil prices and production?
I think what it'll do is we're going to have an extended period of uncertainty and I suspect some volatility. Supply chains are rerouting. You see energy markets are rebalancing at the moment. And of course, the threats of sanctions and tariffs and challenges in certain global arteries like the Red Sea just means that we're trying to find a new equilibrium to be able to deliver energy. The biggest question is going to be the impact on the economy and what that means for markets. As a company, what we have really focused on is building resilience in the company. And you'll have seen from our results last week, the big focus was really continuing to deleverage, have the strength to be able to actually weather whatever uncertainty brings in the next few years.
Does it get offset for you at all by the fact that, the Trump administration has been very bullish on further LNG expansion?
No, I think and that's one of the things we welcome from the incoming administration. The role of LNG is going to be critical for the coming years for multiple countries. So I do think what is going to be key is making sure that we find those balances. And we are indeed one of the largest players, the largest international energy company in LNG. And the key is having multiple supply points, of which one is the U.S., but there are multiple other supply points, and making sure that we are able to actually match our customers' demand with the supply that we are able to access.
What do you see on the demand front at this point?
We continue to see strength. Actually, we see right now tightness for the coming year at least. There hasn't been a lot of net new capacity coming through in 2024, and we're not expecting a lot of it in 2025, though the demand continues to strengthen. Driven by things like, for example, LNG into trucking in places like China and India, but also industry. And you see that happening across the world. Europe, of course, is growing its demand for LNG because of the interruption of Russian supply. So we are bullish on the growing demand for it. And at least in 2025, the markets will remain tight until new volumes come through from Qatar and the U.S.
Well, have these new wrinkles in sort of the evolution of technology and DeepSeek and so forth pushed you to reconsider your long-term power forecasts, at least for North America?
I would say the picture is still evolving. What is clear is that the demand for energy is going to grow, and that AI and what it brings will undoubtedly have a strong push on that demand. The question is just the quantum. Is it going to be a doubling or a tripling between today's demand for data centers by 2030? And so it's really more the range, not the direction. What we are doing is making sure that for all the opportunities we are pursuing, both in the renewable side as well as gas supply, we're locking them with customers whom we trust to be able to have a long-term perspective on this and managing through that uncertainty in a way that allows us to manage the risks that come with the volatility that's ahead of us.
So at this point, the investments and the CapEx and the build out, you don't think we're in the neighborhood yet of being over our skis over the long term?
Difficult to say. The approach we're taking, I have to say, is one of more of this disciplined approach at the moment. I mean, we're slightly sort of controlling more of the capital because what we see is that uncertainty that I referred to earlier. And in a period of uncertainty, my own belief is focus on what you can control and build resilience and strength because you don't know what the weather of tomorrow is going to bring. That doesn't mean we miss out on opportunities, but we also have to be able to sort of keep an eye on where things are going. And at the moment, it's just too foggy to be able to make a call one way or the other as to what the trajectory is going to end up being in the next few years.
What about Russia, Ukraine? What are your expectations of what's going to happen there? And what's the impact, if any, on your business if they do come up with some sort of deal?
Again, difficult to call exactly what will happen there. I mean, what's clear is that let me focus on the energy bit of it. From a gas perspective, Europe really needs gas, which is why these LNG flows into Europe matter. And of course, the sanctions or the potential extension of the sanctions on Russian oil, not to mention Iranian oil, will also create some imbalance in the crude oil markets. And so we're the largest energy trader in the world, and we're beginning to see some of those disruptions play through. Now, of course, while that creates uncertainty for people depending on oil and gas, for the largest energy trader, it creates opportunities as we look to rebalance those trade flows around the world. So we see quite a bit of opportunity as well emerging from that as we monitor the situation and try to understand the discontinuities that are taking place.
I mean, the other big wild card, of course, is the Middle East, and President Trump sort of renewing maximum pressure on Iran, talking yesterday in a joint news conference with Benjamin Netanyahu about the U.S. taking over Gaza. I just wonder how you are calculating what's going to happen there and what it means for oil and gas production and supply.
We haven't seen a huge impact, even through the very difficult last couple of years in the Middle East. We haven't seen a lot of interruption to physical supplies of crude. It's been more than plugged by many other locations. And so we see that less in terms of the physical impact on crude. What it does, of course, do is the uncertainty that plays out there and the potential spillover impacts around the world, including economic impacts. That is more the area we look at. So a proxy we keep a very close eye on is, for example, demand in China, how the industrial sector is behaving in Europe. Those are the second order influencers that we keep an eye on, which I think will impact, at least in the medium term, the demand for energy.
Well, there's also OPEC, right, and how that might affect their strategy and how, I mean, President Trump in his Davos speech said he's going to pressure OPEC to lower oil prices and ramp production. What do you expect to happen there?
All I can expect is what I'm hearing from OPEC as of their decision, was it earlier this week, which in essence is they're going to continue with the plan that they had. Clearly, the key elements, of course, that are impacting the overall picture at the moment are Chinese and global demand. And the decision by OPEC. Once again, I mean, our focus is what we can control. And so what you find is as that uncertainty continues to unfold, all we can do is to make sure that we have more and more points of supply that we are able then to link to the multiple customer connects that we have. And in a world where those connects become tougher for others to be able to deliver on, that's where Shell can differentiate itself and where we are trying to position ourselves as a company, that connector of energy between suppliers and customers.
A lot of moving parts. Wow, thank you for taking the questions. So much to get to today. Appreciate it.
Thank you very much.
Wael Sawan, the CEO of Shell.
Meantime, keeping an eye on Washington, D.C. today and all of these Senate committees that are working on Trump administration confirmations. U.S. Senate Commerce Committee now has approved 1612 to advance the nominee for Commerce, Howard Lutnick. Same with Senate Finance with RFK Jr., Senate Intel with Tulsi Gabbard, and Pam Bondi has been confirmed as AG. So those things are moving quickly this week.
They're all going up in the betting markets.
There we
go. People bet on the confirmations. Obviously, we await the Senate full vote. But on Howard Lutnick, that wasn't seen as a tough one because he's even gotten vocal support from Democrats, including Senator Chuck Schumer.
And a lot of good color reporting on the big White House push behind the more controversial nominees. As we go to break, watch shares of Match today, one of the biggest laggards on the S&P, under some pressure following some disappointing Q1 revenue guidance. Not the only guidance today that's been soft. Company also announcing that Zillow's co-founder Spencer Rascoff will be taking over as the company's new CEO effective immediately. Shares down 7%. Stay with us.
On Peacock.
Let's get a check on Bitcoin today, down about 5% over the last week of trading, following some volatile sessions, as you know, amid these ongoing geopolitical trade tensions, now trading below 98K. Yesterday, new White House crypto czar David Sachs met with lawmakers. It was his first public appearance since taking the role to talk about the administration's priorities. Also spoke with CNBC about the group's goal for a Bitcoin reserve.
I guess it's possible that the Sovereign Wealth Fund could decide that they want to make Bitcoin or digital assets part of its portfolio. You're going to have to ask the incoming Commerce Secretary Howard Lutnick about that. The item that President Trump asked our working group on digital assets to study is whether it's feasible to create either a Bitcoin reserve or some sort of digital asset stockpile. And so we're going to be looking at that question. We haven't committed yet to doing it, but it's one of the first things we're going to be looking at.
Bitcoin price is up more than 40% since the election. Also sort of commented that maybe an even higher priority is stablecoin legislation, which has big implications for the Treasury as well.
You know, the Bitcoin sold off as a result. I think there are just such great expectations that this administration already is going to make it a priority. So maybe lack of specific sort of market moving news, but clearly, you know, they are moving and they're looking at it. So I think market now is a show me with the Bitcoin policies. After the break, we're going to take a closer look at Elon Musk's role in the Trump administration, now designated as a special government employee. And also coming up on Money Movers, don't miss CEO of Ares Management on the company's latest earnings and some leadership changes. The stock more than doubling over the last full year of trading. We'll be right back.
or hers.com.
Elon Musk officially serving the Trump administration as a special government employee. Our Eamon Javers in D.C. to explain what this means for Musk and his influence. Morning, Eamon.
Yeah, Carl, that's right. The White House confirmed this week that Elon is serving as a special governmental employee. Now, that's a specific legal category inside the federal government, and it comes with certain requirements and restrictions. A White House official told CNBC Tuesday that Musk will comply with all the rules and regulations that govern special governmental employees. And according to the Federal Office of Government Ethics, that means Musk won't be able to serve for more than 130 days during any given year. Now, we don't know on what date that clock started on Musk's job, but it is ticking, so that's a sense of urgency for him. If he wants to serve longer than about 6 months, the White House is going to need to find another role for him. Now, special governmental employees are also required to file public financial disclosure documents within 30 days of assuming their position. Given Musk's vast holdings, those documents could make for interesting reading. The other rule that could come into play here is that special governmental employees are prohibited under the criminal statute from personally and substantially participating in any particular matter that would have a direct and predictable effect on the employee's financial interests. Now, given Musk's vast holdings, that could mean he can't be involved in anything affecting the auto industry related to Tesla, NASA and space exploration that's related to SpaceX, media or social media related to his X platform, and even infrastructure projects that the Boring Company may have an interest in. Now, Musk has a history of tangling with or ignoring government regulators, so enforcing all of this could be tricky, but outside groups can be expected to sue the government to ensure that he follows the rules, so that may set up some battles to come over his exact status. But, Carl, we talked to the White House yesterday about this. They say he will follow all of these rules, so we'll watch for that.
Meantime, NBC's got this piece up, Eamon, that Musk has, quote, received quiet White House reminders in recent days that his power is not unchecked. Wonder what you make of that.
Well, they're saying he needs to report to the chief of staff at the White House. It's been a long time since Elon Musk has had a boss. We'll see how that works out.
Yeah, Eamon, you know, the headlines around the Treasury Department and so-called access that Doge was given got a lot of attention. What do we really know there in terms of these recent reports that it's read-only?
Yeah. Well, the Treasury put out a statement yesterday saying that the access is read-only, which means that at least so far, these new Doge employees are not inputting code, changing the way the payment system operates. But I think the question is, you know, with these new employees from Doge coming in to get this access, the unknown that we don't have the answer to right now is, what is the goal of that effort? What are they trying to do by gaining that access? And what are they going to do with that data once they have it? We don't know the answer to that, but this is extraordinarily valuable and sensitive data that they're getting access to. The idea that new people would have their fingers on the keyboard in a new administration is not necessarily sort of outrageous on its face. The question is, what changes are they contemplating? Who's ordering this, and where is all this going? And that we just don't have visibility into. It's been, frankly, a little bit difficult to even figure out who the people are who are making these decisions and executing this playbook inside these organizations. There's been some effort to keep their names confidential, and that's not how the federal government works.
But, I mean, Musk has been very clear about what he wants with the information, which is he wants to find the waste and fraud and the abuse of taxpayer dollars. That's why I've been reading the Democrats' criticism so carefully, and I don't understand what they're so afraid of. They're throwing accusations, everything from he's taking our money to you know, AOC's, he's unintelligent. Like it doesn't make any sense.
Yeah, I mean, I agree with you. Like I said, the idea that, you know, new people are coming in and have their fingers on the keyboard is just, you know, on its face not outrageous and, you know, not even that different. You know, it's the backgrounds of these people, where they come from, you know, that is new, right? We haven't seen people from the tech industry come in and do this. Typically, it's government people who do it. But this is a new administration with a new approach. The question is, again, you know, who ordered this? What's the intent with that? And what happens to the data? And what changes do they make to the payment systems? That's where you could get problems, but we haven't seen any of that yet, so we just don't know.
Yeah. Eamon, thank you. Eamon Javers in D.C. We're keeping an eye, of course, on a lot of movers due to earnings. You've got Alphabet shares down sharply, AMD shares down sharply as well. Uber shares accelerating their losses also. We'll have a lot more coverage of those names and many others in the next hour.